Hello everybody and welcome to this US session brief. We're on Thursday the 27th of April 2023, just under half an hour until the US market open. The biggest news today is the release of the GDP numbers, and they've came in lower than expected. Posted already in the chat room right on cue. We slowed down to 1.1% annualized, which is weaker than economists expected at 1.9%, but matching the tone of the ISM surveys that we've had recently. Initial jobless claims have dropped back last week, though, which will ease recession fears just a little bit. You can see that initial claims number that I've just posted here at 230k, expected 248. The last one was 246. So again, just a little bit of a mixed bag there of data. In terms of technically, the S&P has been able to regain some of them losses from yesterday, albeit not quite at the daily bar open. 1495 is that sort of area we'll be looking for. Two lower closes in a row, and you got to be thinking another leg lower from here, haven't you? I mean, we've seen a bounce today, yes, but with the technical breakout, I was certainly looking for a move back into the 4,000 handle. More on that in a second. Meta's beat on earnings yesterday just helped sentiment in terms of the earnings that we've been having come through, as well as Microsoft. So we saw tech actually move higher yesterday, and the Nasdaq was performing quite well. Gold and long-term treasuries have hit a slight bid. Bitcoin has recovered a little bit today as well. Asian markets, they turned positive today, with most seeing gains or small losses. New Zealand business confidence remains negative, but inflation expectations have moderated. President Xi and Ukraine President Zelensky speak for the first time since the Russian invasion after Ukraine has long sought China's help to end the war. Alibaba Cloud has slashed prices to spur revenue growth before possible IPO. European markets have been mostly firmer. Industrials, personal care, healthcare outperform. Banks are in the spotlight. Media is weaker. Deutsche Bank posted better than expected Q1 profit as higher rates offset weaker revenues. Job cuts flagged, so that's been able to help the DAX today remain quite firm above a key support level as well, I must add. The bearish view on EU equities is becoming a consensus, though, leaving room for potential upside surprises. In the Americas, Activision executives are vowing to fight the UK ruling that blocked Microsoft's $75 billion acquisition of the company. It's quite a major acquisition or potential acquisition that's being blocked by UK regulators. US regulators and banks are in a standoff over First Republic's rescue, and Disney's streaming chief product officer among those who have been let go in the latest round of layoffs. We've had all the data releases pretty much for today. I'm sure we've got a few more earnings today. We've got Mastercard. They are coming through after hours. Yes, after hours. We've got Merck, who should have just come out. We've got Mastercard, who should have just come out or should be coming out soon. S&P Global will be coming out, and I think there's some of the main ones. Intel, Caterpillar, a few of them as well. So a few more earnings to come through. Let's see how markets are trading. Like I just mentioned on the S&P, but then on the US dollar yen, currently trading higher, and we're currently trading at the high of yesterday. We did break it earlier. That's just been moved back lower, and you're seeing a mixed bag so far this week. Up, down, down, up again today. How can we finish the week? Remember, we've got this channel structure that we need to try and continue holding, and we haven't quite got to sort of the bottom end yet, but don't have to technically get to that bottom end as long as this structure holds. And from here, if you get a daily close back above that the previous two red days, then you start to consider a move back to the top of this structure around 135.30. Looking at oil, so this is crude. So Texas oil, we've got 76.20, pierced that yesterday, big move below there. That was a key level for me, I mentioned in the chat yesterday. Absolutely smashed, obliterated, and then that move gets exasperated because you've got a lot of leveraged positions and a lot of stops get taken out, so you can see a sharper move lower than you might at such a key level. And now we're in sort of the center of that 76.20 and 72.50. So for me, I'd like to see a move down into that 72.50. Why is that important? Well, we've seen quite a few moves into there and off there in recent times. It pretty much tells its own story. Gold is in a trend, is in a channel of its own to the upside. We mentioned this without drawing the most perfect channel, it must be said, yesterday. Could probably neaten that up today. But nevertheless, we are there. We're still around that sort of 2,000 handle. very choppy on gold at the moment. You can see this price action over the past 2 weeks not really gone anywhere, just toying with the idea of flirting with 2000 really. You can see we went into 2000, back down, broke above 2000, back down, retesting 2000. Is it going to be another move back down? I'm favouring the downside on gold rather than the upside. But with it, First Republic Bank, it's looking under quite a lot of stress. Talked about that in the European brief this morning. I think there's some talks at the moment. Let me just see here. Where are we? Between the US government and the lender's largest rivals. So regulators have refrained from stepping in so far, even despite the stock plummeting yesterday and Tuesday, hoping that depositor banks will hash out a deal with the troubled lender to ensure it doesn't collapse and lose their money. Big bank executives, though, are keen to avoid throwing good money after bad, expecting that if they wait to see how it plays out, they might get some cash back. So again, if you see another bank go under, that might just give the gold the incentive it needs to push back through 2000 and look at them new yearly highs and even the new all-time high against the US dollar. So yeah, that's my thoughts. That's where we're at. State of play, all mapped out. Let's have a chat inside the Inside X chat. Until next time, all the best with your trading and bye for now.